Imagine this. You've been following XRP for years. Maybe you've even invested in it. You've seen the legal battles, the community debates, and the recent price surge. Everything looks good until you find out that more than half of all XRP is in the hands of a small group of insiders. That's right, over 50% of the total supply is controlled by Ripple Labs, its co-founders and a few early holders. And just a couple of weeks ago, one of those insiders, Ripple's co-founder Chris Larsen, moved a jaw-dropping 50 million XRP worth roughly $175 million into multiple wallets. About $140 million worth ended up on exchanges. Now, moves like that aren't exactly small potatoes. The market noticed, and so did investors. XRP, which had just hit its all-time high around $3.66, dropped over 100% in a matter of days, landing near $3.09. And that, of course, set off a storm of speculation. Was this just profit-taking at the top, a strategic move to fund something bigger, or is it proof that XRP's centralization problem is as real as critics have been saying for years? In this video, we're going to break down exactly how much XRP insiders really hold, what this means for the token's future, and why centralization is still one of the most controversial topics in the XRP ecosystem. We'll look at the numbers, the history, the market reaction, and of course, what all of this could mean for your portfolio. So grab a coffee because we're about to unpack the insider side of XRP. And trust me, once you see the full picture, you might look at those big green candles a little differently. Before we dive into the insider numbers, let's quickly rewind and talk about what XRP actually is, because understanding its origins is key to understanding why its supply is so concentrated. XRP was created back in 2012 by Jed McCaleb, Chris Larsen, and Arthur Brito. Unlike Bitcoin, which is mined over time, XRP was fully pre-mined at launch. 100 billion tokens in total. From the start, a massive portion of that supply was allocated to Ripple Labs and its founders. Ripple's big vision was to make cross-border payments faster, cheaper, and more efficient for banks and financial institutions. Instead of relying on the slow, expensive SWIFT network, XRP could act as a bridge currency, settling transactions in seconds instead of days. Over the years, Ripple Labs has positioned itself as a primary driver of XRP adoption. But with that central role came centralized control, especially over the supply. And to address concerns about flooding the market, Ripple locked most of its holdings into escrow accounts, releasing them gradually each month. It's a system that's supposed to bring predictability, but as we'll see in a moment, critics argue it still leaves way too much power in the hands of a few. All right, let's talk numbers, because this is where the insider debate really heats up. First, let's look at Ripple Labs itself. The company still holds roughly 46 billion XRP. Most of this is in escrow, released at a pace of 1 billion per month. If they don't use it, it goes back into escrow for future months. Ripple says this system ensures predictable, controlled distribution, but the fact remains, almost half of all XRP is under Ripple's control. Then we have the co-founders and other early insiders. Chris Larsen, for example, personally holds around 2.8 billion XRP. That's between 4.6% and 5% of the total circulating supply, worth billions of dollars at current prices. And remember, this is just one person. On-chain data shows that the top 10 XRP wallets hold over 41% of the total supply. Expand that to the top 20 wallets and you're looking at just over 50%. Now, not all of these wallets belong to individuals. Some are Ripple controlled, others are exchanges holding XRP for customers. But a significant portion is still in the hands of Ripple executives, early investors, and other whale-sized holders. This is where the 51% insider-controlled claim comes from. If you combine Ripple Labs' escrow holdings with the wallets known to belong to founders and major insiders, you end up with a majority of the total supply being in very few hands. To put that into perspective, think about Bitcoin. The largest Bitcoin wallet belongs to Binance and holds about 1.3% of the supply, mainly customer deposits. No single entity comes anywhere near controlling 50% of Bitcoin. That's why critics argue that XRP's concentration is a huge red flag for decentralization. So what's the big deal? Well, in theory, if a handful of entities control the majority of supply, they can influence price simply by selling or even by the threat of selling. Even if they don't dump, the perception that they could keeps some investors on edge. And it's not just about price action, there's also a governance element. In most crypto ecosystems, decentralization is about more than just who runs the network. It's about who controls the economic state. If insiders hold most of the chips, they inevitably hold a lot of influence over how the project evolves. Now, Ripple would counter this argument by saying these holdings are necessary to fund development, sign partnerships, and support liquidity for institutional clients. They also point out that XRP Ledger itself is open source and runs independently of Ripple Labs. But for a lot of investors, that doesn't erase the fact that the majority of XRP is tied to a few major players. This is the heart of the insider controversy. Is concentrated supply a strategic advantage for building out a global payment network, or is it a centralization flaw that puts too much power into few hands? So why does insider control matter so much? After all, big companies hold large stakes in their own stock all the time, right? Well, in crypto, the rules of the game are a little different. Decentralization isn't just a buzzword, it's the foundation of the whole space. The idea is that no single person, company, or group should be able to control the network, the currency, or the market. When a small group holds a massive portion of a coin's supply, it introduces what traders call centralization risk. That means just a few players can influence the price with their actions, and they don't even have to sell for the market to react. Sometimes just seeing a big transfer from a known insider wallet to an exchange is enough to spark panic selling. From a price perspective, think about liquidity. If Ripple or another insider decides to sell a large amount, it can create downward pressure that the market can't absorb smoothly. That's why we see sudden drops when big transfers happen, especially if they come right after a rally, like Chris Larsen's recent move. Then there's the psychological side. Retail investors, like you and me, tend to feel uneasy when they know a handful of wallets could change the market overnight. It creates this constant overhang where traders are always wondering, when will they sell next? It also touches on governance and trust. Even if the XRP Ledger is technically decentralized in terms of who can run a node or validate transactions, the economic stake is still heavily centralized. And in any financial system, control of supply is a form of power. For some, this isn't a deal breaker. They see Ripple as a legitimate company with a strong vision, and they trust it to use those holdings strategically. For others, it's a sticking point that keeps them from touching XRP at all. This is why the insider conversation never goes away. It's not just about numbers, it's about confidence, perception, and whether XRP can ever truly be seen as a decentralized cryptocurrency. Now, looking ahead, the big question is whether Ripple will actually reduce its holdings over time. The company has hinted in the past that it plans to distribute XRP gradually as part of its growth strategy. But gradual can mean very different things depending on who you ask. Without a clear public roadmap for reducing its stake, skepticism will likely remain. More decentralization could absolutely help XRP gain stronger retail trust. Right now, a lot of smaller investors hesitate because they feel like the game is tilted toward the insiders. If Ripple were to offload more of its holdings into the open market, or better yet, into wider community and institutional hands, it could change the perception almost overnight. Institutional adoption, however, is a double-edged sword. Banks and payment providers care less about decentralization and more about stability, liquidity, and regulatory clarity. In the sense, Ripple's large reserves can actually be a selling point. It means the company can provide liquidity on demand for large transactions. As for regulation, XRP is in a much better spot after being officially recognized as not a security in the US. That removes a huge legal cloud and could open doors to more partnerships and listings. But regulation won't erase the supply concentration issue. The insider overhang will still be there, and so will the debates about whether XRP can truly claim the decentralization badge. Ultimately, XRP's future will depend on how well Ripple balances two competing forces, maintaining enough control to drive institutional deals while letting go of enough supply to win over the broader crypto community. So here's the bottom line. XRP has made huge strides. Legal clarity in the US, strong partnerships, and a clear vision for transforming cross-border payments. But the insider supply issue isn't going away anytime soon. Whether you see it as a strategic advantage or a centralization flaw depends on your perspective and maybe even your position in the market. If you're holding XRP, watching XRP, or just curious about the space, keep an eye on on-chain movements from Ripple and its co-founders. Those transactions can give you clues about what might be coming next. So now I want to hear from you guys. Do you think Ripple's insider control is holding XRP back, or is it just part of the plan to take XRP mainstream? Drop your thoughts in the comments. I read them all. If you found this breakdown helpful, make sure to hit the like button, subscribe, and turn on notifications so you don't miss the next update. See you in the next one.